What is going on, investors? Hopefully you guys are doing well out there. It's time for Macro Sunday here on the Investor Channel, where we continue kind of a series of videos where we're following these market declines that we really started seeing in the indexes since late December and, quite frankly, the first of the year, both in the S&P 500 index and also the NASDAQ index. We've just basically seen since the first of the year, these markets are declining. We'll look at this from a micro view. We'll see if these are showing signs of reversals. We'll see if there's any evidence that these markets are starting to bottom, are starting to reverse. We'll talk about that on today's show right at the top. We'll also talk about some of the causes that we've been seeing with these market declines and the fact that anytime you have market crashes, a correction or a pullback, whatever you want to call it, it creates rotations. So essentially what we've been seeing is bubble valuation or kind of pandemic plays like Teladoc or like a PayPal or even like a Moderna. These stocks have crashed, okay? When you go from over $300 per share to under $60 per share, as you've seen in the case of Teladoc just in the last couple of months, well, I would absolutely categorize that as a market crash. So depending on what stocks you were in or overweight, you certainly could be feeling a market crash. Those stocks are certainly out, but there are sectors that are absolutely in style and in vogue right now. That happens to be more than likely kind of value plays or commodity plays or kind of the combination of two, like a Berkshire Hathaway, a gold, an XLE. We'll talk about that as well. We'll also talk about a plan of action, and that's important here on the channel because I don't think there's enough of this content here on YouTube. When I look at the subscriber demographics over on our channel, over a third of the people watching this video are actually what I would call in retirement age. If you want to include the group that I would call approaching retirement age, 2/3 of the viewers of the Investor Channel are what I would call close to retirement or in retirement. That's why the content we put up on this channel varies so much from what you see here on YouTube. The all in, all out, buy the dip, dollar cost average advice that you see constantly here on YouTube. We don't give that advice here because I tell you what, if you're close to retirement, if you're in a margin account, if you're trying to de-risk your portfolio, buying the dip, dollar cost averaging are terrible, absolutely terrible pieces of advice if you're close to retirement or in retirement, which is the vast majority of the viewers of this channel. Who can take more risk? We'll talk about that, and then we'll also talk about a plan of action and the plan that I'll have going forward. I happen to be in my 40s. I would say I'm close to retirement. It's still a little ways away, but time goes pretty quickly, especially the older you get. But I'm certainly looking to step in here and buy some of these indexes and buy certain stocks, and so we'll come it from that angle as well. Now, in terms of the immediate technicals, look, these indexes, many stocks are making this downward channel, and it is a deadly channel to be in. You do not, I repeat, you do not want to dollar cost average and buy the dip when you are in this type of channel. You actually dollar cost average, in my opinion, and you buy the dip in uptrends. That's actually an area where I would like to step in and buy the dip. Are these markets showing any signs of reversal or any signs of bottoming? I would say in the shorter term, absolutely not. Maybe in the really micro, we're talking just over the last week or so. Have we made some higher lows along here? Absolutely, but you've done that all along this downtrend. What we are looking for when you make these downward channels, and look, you can look at it from an index perspective. I can pull up a chart of Uber as well. Look at this downward channel that this stock has been in. In fact, when we did our earnings video back in February, I said, just wait until it pops its head up over this upper channel, and I got a lot of comments on my channel saying, no, you just dollar cost average, you just keep buying, you just keep buying. Well, if you would have waited, you could have gotten this stock much, much lower. In fact, over 10% lower than where it was when we recorded that video. What you look for when these indexes or your stock is in this downward channel is actually a breakout. And what a breakout would look like would be usually, typically, not all the time, but typically kind of a larger green candle. And it could, we're on a daily view here on the S&P 500. This could be over a week. This could also be over a month as well. We're looking for a large green candle up above the upper channel line. And look, where you draw this upper channel line, it doesn't really matter. Quite frankly, the thing that matters the most is you actually want that green candle to exceed the previous highs, which is in this case could technically be down here at about 4280. I would say more appropriately, probably closer up here at about 4400. This is on the S&P 500, which is currently trading at about 4200. So you'd have to have a pretty solid move, at bare minimum about 100-point move to get above the previous cluster here and get us out of this channel to really confirm it. I think you need close closer to darn near a 200-point move on the S&P 500 to really show you that you've busted out of this channel. Now, some of you might be wondering, well, what does this look like in reality? Well, here's the Bitcoin chart. Believe it or not, Bitcoin started its drop back actually in November, and it actually started breaking out. Notice this big, gigantic green candle that we've made, and it busted out above our upper trend line here on Bitcoin. That actually broke out in February. And so you could argue, and I absolutely could buy into this argument, that Bitcoin is actually a leading indicator to the S&P 500 and the NASDAQ, okay? The fact that it actually started its declines before the broader markets did, and it's actually breaking. It would actually make a lot of sense that it would actually break to the upside faster than the general markets would. So it could be that the markets will start to show signs of bottomings and signs of reversal. The fact that Bitcoin has done that as well. Again, kind of a loose tie there, but I certainly could see that argument considering how big of a market cap Bitcoin has in the overall markets. Now, this one has been trading in a predictable pattern since then. I talked about how you get confirmation when you break above the previous cluster of highs, which was on Bitcoin at about 4,200. Notice that our next cluster of highs on the breakout broke above that up to 4,400. This was confirmation to me that this was ready for a breakout trade. We bought these pullbacks down in here. We bought this pullback down here at about 38, and I've been trading this, quite frankly, ever since then. Buying these dips on here and then selling the pops. And then again, that's from a trading mindset. I don't know how many of you are in that mindset, but what we are looking for on a breakout is a series of higher highs. Now, over the last couple of days, we haven't really confirmed that with Bitcoin. Wouldn't have me super concerned because you are still confirming the higher sets of lows here. And that might be the most important thing, is you keep this upper trend line that you've really made since February. You're actually keeping this intact. As long as this lower trend line stays intact, well, all of a sudden this thing all of a sudden looks like it wants to reverse. Now, in terms of the S&P 500, we are not seeing that, but we could see evidence of that in the coming weeks and months ahead. We'll certainly keep an eye on that here on the channel, but as of the current time, we are still seeing these markets in a pretty massive decline. And some of the causes I think are pretty obvious, okay? The pandemic shocks are still weighing on this market. When you shut down global economies, even partially, but certainly over the length of time that we did here in the United States and certainly around the world, you're gonna have supply chain disruption that lasts years. You also had a significant amount of government spending essentially across the world, but particularly here in the United States. And what does that do? That creates inflation. It creates an inflationary environment. And we've certainly seen that from the consumer price index here, which is basically an index that tracks a basket of goods here in the United States. I'm making no news here. The fact that this is up over 8%, and in fact, it's at highs that we have not seen in over 40 years here in the United States. The big major point with the CPI index is anytime it's gotten over 5, which is kind of this line that I'm kind of running my cursor over here, this 5 mark, anytime the consumer price index has gotten over 5 on lockstep without fail, it's triggered a recession. Every single time it's gotten over the 5 spot, it has triggered a recession, and right now we're sitting close to 8 on that one. And so there's many people that believe, including myself, that a recession is very, very much on the doorstep of the United States, if not right now. And you tend to find out that you're in a recession after you're already in one. But the other thing to note here with the consumer price index, because we've got a lot of data here. I mean, we've got like 70 years of data here or more. It tends to spike and then come down rather quickly. So we're seeing a spiking. It certainly could go up even more, but understand that these things tend to spike and then come back down. Now, in terms of when you have these market crashes, you have these market rotations, it creates that rotation that I've talked about. So out right now, currently, people are trying to sell these stocks and get away from them as fast as they can, are kind of the bubble valuation, the pandemic plays, the Teladoc Healths, the PayPals, the Zoom videos, the mRNAs. So we've got Teladoc Health chart here. I mean, look at this. It looks like the side of a mountain. PayPal chart looks identical to that. We've got Moderna here, looks very similar. And so some of you might be wondering, but many of you, especially the younger demographic here on the channel, will say, hey, Here's your opportunity. The Teladoc Healths, the PayPal, the Zoom videos, the Alibabas, the Moderners. Here's your opportunity in this market since they have sold off tremendously over the last few months. But I would caution you a little bit. I've got a chart of KB Homes up here, and let me slide this one to the right a little bit. And so now you're looking at a KB Homes. That started trading back in the 80s, and it peaked, you guessed it, right before the housing crisis really started to become apparent here in the United States, kind of in that 05, 06 timeframe. Well, notice what happened to KB Homes over the next 2 or 3 years. The stock absolutely got obliterated. And what does this stock chart look like? Well, I tell you what, it looks a heck of a lot like the Teladoc Health chart, looks a heck of a lot like the PayPal chart, and it looks a lot like the Moderna chart as well. When you have these big old bubble valuations and stocks in sectors and hot sectors get overbought, well, they obviously come crashing down. Now, you might ask yourself, why did I slide this one to the right? Because notice I'll slide KB Homes off to the right, and this stock really bottomed out kind of in 09, but it also made another bottom in 2011. It also retested the bottom it made in 2009. It retested that again in 2016. It wasn't really until about 2017, 2018, we're talking a full 8 years, 6 to 8 years after this stock really had a big crash where you would have just gotten back to break even. Obviously, if you had bought this stock in the height of the housing boom, well, you're still literally down over 50% on this stock. This is a cautionary reminder that when you have hot sectors and hot stocks like home stocks and home builders were back in 04, 05, 06, well, it's a cautionary tale that yes, you can buy the dip on this one. Yes, you could have dollar cost averaged into KB Homes over the years. You would still likely be down on that investment. Now, that's not necessarily the case with Teladoc Health. Healthcare is certainly a different sector than home building, but you get the idea. When I look at these charts, I look at the KB Homes chart and I say to myself, well, it can take a long time, 7, 8, 9, 10 years until you see recovery. And if you're close to retirement, if you're in retirement, even if you're a younger investor and you're in your 20s, well, if you had bought KB Homes in your 20s when you were in 2007, you'd still be underwater on this when we can pull up charts of Apple and Microsoft and Amazon and Tesla, and you would basically have gotten rich over that same time frame. So sector allocation, what you rotate into is very key. And just because a stock makes this big, gigantic decline doesn't, and I repeat, it does not mean that that is a good investment and something that I would rotate into. Now, markets crash relatively frequently, especially if you factor in over your entire life, but crashes are fairly easy to determine when they are over. And I'm going to show that to you here on the S&P 500 chart. Notice that I have a couple of the more major pullbacks that we've seen over the last decade or so over at the S&P 500. Obviously, the March one, which most of us remember, are very familiar with, that was over a 35% drop. And I talked about how our most recent drop is closer to about 14%. So this thing could get deeper and pull back even faster. We also saw a drop towards the end of 2018. I think this was kind of taper tantrum. This was the first time that the Federal Reserve was actually kind of hiking interest rates or kind of discussing that. Well, we saw a 20% drawdown in the S&P 500. But what I also want to draw your attention to was the last major crash. Obviously, the March crash that we had was major, but it rebounded in a major way. And I'll show you that rebound here in a second. But I flashed back to the kind of the 2008, 2007, 2008 timeframe. Most people will categorize the crash really September and October of 2008. You had some masterful declines on the stock market. But overall, if you kind of take the peaks back in 2007 all the way to the troughs back in March of 2009, which really signaled the bottom of the stock market, you were down over 58%. Yeah, 58% on the S&P 500. What I want you to pay attention to is not this blue box. This was the decline of the S&P 500 really over the course of about a year or so. What I want you to pay attention to is what happened after this blue box. Notice that we start seeing green candles show up. Notice inside the blue box, yes, you had some small areas where you had some green candles. You actually had 2 successive ones. But again, this was back in May of 2008. The drop of 08, 09 is typically attributed to this kind of October period. Well, you didn't see a green candle show up all but once in December, but notice after this blue box, we start seeing lots of green candles. Look how many green candles you start to print after the markets start to bottom. That is your clue. That is your clue that markets are starting to reverse to a certain degree. Notice as well, we can even zoom into areas back here when we made our last two significant drops. What were the big red candles followed by? Where large green candles started showing up. And you might ask yourself, well, I got to buy in the bottom. No, you really didn't have to. You could wait until these green candles show up. And again, this goes back to the fact that the vast majority of the people watching this channel are in retirement or close to retirement. It would be my advice to that group of people to not try to pick the bottom in here, not buy every red candle that shows up on an S&P 500 chart or the stock chart of your favorite stock. My advice to you would be simply wait until those green candles show up and those reversal patterns start to come, because you could have bought any of these green candles after the drop. You could have bought any of these green candles, and certainly going back to 2008 and 2009, you could have bought any of the green candles that showed up after the drop, and you'd still be up massively, and you would have protected yourself against a much larger drop, because I will zoom back in to the 2008, 2010 kind of time frame. If you would have first started to buy the dip, okay, we had an initial drop on the S&P 500 of probably about 10 or 12%, and it kept dropping. Well, you would have not gotten back to even until about 6 or 7 years later. Look at this, guys. The stock market started to initially drop in 2007 and 2008, and people probably immediately said, buy the dip, go all in, get a second mortgage, buy this market on its way down. You got a dollar cost average here. Well, you could have bought it up here, the S&P 500 at 13 to 1400. It didn't get back to 13 and 1400. We're talking about just get back to break even for another 6 to 7 years. If you're 40 years old, if you're 45 years old, if you're 55 years old, that would put you right into retirement age, just getting back to the money and the investment you had just 6 or 7 years prior. Whereas you could have waited for this entire market to flush out and bought down here at any of these green candles when the reversal trend was clear as day to anybody, even amateurs at technical analysis, and you would have been up massively. We're talking about 50% gains just in the 2 or 3 year time frame. This is why we are being patient here on the channel. That was today's video. Again, we remain patient. We remain mindful of these sector rotations. We're also monitoring reversal patterns that we're seeing in kind of cryptocurrency markets and wondering if that's potentially a leading indicator for the broader markets as well. But it is during these times when you have major pullbacks that I do like to create a shopping list, and that shopping list tends to be a little bit broader than it normally does. That was today's video. Hopefully you guys enjoyed it. We'll be back again soon with more. Good luck with your investments.